Good afternoon, ladies and gentlemen. This afternoon, we'll be looking at consolidation of financial statements under IFRS 10, IFRS 3, business combinations and goodwill. We shall be looking at the impact of full goodwill and partial goodwill on impairment of goodwill. Very soon, I'll be sharing a question with you that we are going to work out together. Let's just look at the question. That is the question. We have FCO Interactive, preparation of consolidated statement of financial position. The question is given there. Brown acquired 60% of investment in Harris on 1st January 2026 for $720,000 when the retained earnings of Harris was $300,000, that is pre-acquisition. The extract of their financial statements are given below. So share capital, we are given. Retained earnings, we are given. Notes. During the year, Harris sold goods to Brown for $200,000, 1/4 of which remains in Brown's inventory at 31st December. Harris earns 25% markup on all items sold. I want to explain there. What we are saying is when goods are not sold outside the group, there is unrealized profit. Unrealized profit is always in the unsold items. And if it is the parent selling to the subsidiary, there is no impact on NCI. But in this case, it is the subsidiary selling to the parent. Therefore, there is an impact on NCI. Therefore, the unrealized profit should be removed from the entity selling. In this case, Brown is a subsidiary. Therefore, the unrealized profit will be deducted from Brown's post-acquisition profits. So now here, if you look at 1/4 of 200,000, that is 50. The 50 is the selling price, and we cannot use the markup on the selling price. We have to change markup to margin. When you are changing markup to margin, we scale up. So it will be 25% over 100 plus 25, that is scaling up. Multiplied by 50, that will be 10,000. That's the unrealized profit. Goodwill on acquisition of Harris was impaired by 10%. Required calculate goodwill under 1. Fair value of NCI is 480,000 on acquisition. 2. Fair value of NCI is proportionate to the net assets on the date of acquisition. So under numero 1, that is full goodwill. And under full goodwill, there is the impact of impairment of goodwill. which will be split between NCI and goodwill. Under 2, that is partial goodwill, and impairment of goodwill will only affect the group's share. Since that is partial goodwill, there is no NCI. The group retained earnings under full goodwill and under partial goodwill. We are now going to answer this question together, and very soon I'll be sharing with you the whiteboard. Okay. Good. So we are going to answer this question, that is calculation of goodwill. So goodwill here, it will be full goodwill, and they are partial. Because there are 2 requirements. So we have consideration, we are told. The consideration, there 720, and on the other side is also 720. NCI we are given 480. Here NCI will be based on the net assets on acquisition. There was share capital, and there was pre-acquisition 300 multiplied by 40, which gives us 320. So there we have 1,200. There we have 1040. Then we have net assets at acquisition. Net assets at acquisition. We have share capital. Share capital for the subsidiary, which is 500. And there, which is 500. Pre-acquisition. Earnings was 300. 300. Net assets at acquisition, it was 800. 800. Then we have now the goodwill. Goodwill there, it is 400. Goodwill there, is 240. Impairment, impairment 10%, there is 40. There 24. Carrying value, to 16, 360. That's how you can calculate the goodwill under two methods, full goodwill and partial goodwill. So now we are going to look at how to calculate the group retained earnings. In group retained earnings, we have group retained earnings, we have Brown, then we have Harris, year-end earnings, year-end earnings for Brown, we have, which is the parent, we have 3430. 3430. 3430. No, on Harris, that is not 3430, that's 18. Then we have pre-acquisition profit. Pre-acquisition earnings. There we have 300. Then we have unrealized profit, which we calculated, that's 10. That will be post-acquisition profit, which will be for 1490. Then we have group share. Group share there, it will be 60% of 1490. That's what we claim. So we can look at the calculation here. Can we just check the calculation? Can check the calculation there, which will be 1894. 894. That is, just let me check with the calculator there. We have 1490 multiplied by 60. That's 894. And then now we have NCI, group share of NCI. Group share of impairment. The impairment there was 40. Group share 60. So that will be 24. And that will give us the group retained earnings, 34, 30 plus 894 less 24. That will give us 43. Is 43. So under group retained earnings, the final answer will be the same under partial and for goodwill. The reason being that on the partial goodwill, the impairment was 24. The whole impairment will reduce the group retained earnings. Under full goodwill, 60% of 40, it also gives us 24. So it was coincidence. Under both methods, the impairment would be 24. So we can now calculate the NCI under both methods. So we got to so we go now to NCI under for goodwill. And under partial. Under partial goodwill. So we have NCI at acquisition. NCI at acquisition under for goodwill we are given is 480. Here it was calculated 320. Post acquisition. Post acquisition, it will be 1,490 multiplied by 40%. So we can calculate this one quickly. We have 1,490 multiplied by 40. That is 596. 596. There, 596. Then impairment. Impairment of goodwill. So it was 40 multiplied by 0.4. This is 16. There, this is partial goodwill, there's nothing. So we have 320 plus 596. This gives us 916. And on the other side, 480 plus 596 less 16, 1060. So, ladies and gentlemen, we have tackled that question, and that's how you actually determine the requirements of the question. So for today, we can end here. Thank you very much for attending this class, and God bless you.